Good evening, students. This is CS Srinivasaranakka. So today we are here to discuss the question paper, CMA final SFM question paper. Now it is in our hands. So this is completed exam today, CMA final. Let us review. So already day before exam strategy we already discussed. Okay, so as per our strategy, question paper is there and it is covered from our material or not, and whether it is moderate or not, everything we'll discuss now. As far as my opinion, the question paper is moderate. Means students can get easily from 40 to 50 marks. But beyond 50 marks, maybe it is difficult because it is a lengthy paper. Maybe time is a constraint for the students, majority of the cases. But direct questions are also asked in some chapters, but few chapters direct questions are not there. For example, valuation of bands. One problem is there, which is not there in your study material. A comprehensive style of question. Like that, it is a mixed actually. So let us see the MCQs first. There are total 15 MCQs are there, and out of that 8 to 9 MCQs directly from your question bank, CMA Institute material. This is modified NPV. Even last attempt also they asked modified NPV. Now also they are asking modified NPV calculation. Similar MCQ is there in your institute material. So it is very easy to calculate, but it is lengthy. You have to calculate carefully. 2 marks MCQ, it will take time. Next, second one is from valuation of bonds and shares actually, and very simple to calculate. Depend upon the growth rate, dividends growth model. Okay, so with that growth you can calculate 2 marks. This is also easy to answer. And next one is this is from portfolio performance evaluation, Sharpe ratio, Trainers ratio, or as well as Johnson's alpha. All these things are there. So this is Sharpe ratio. Easy to calculate, but it's time taking. Slowly you have to calculate Sharpe ratio. The formula RP minus RF divided by beta. Sigma Sharpe ratio. That you have to calculate. Very simple to calculate. All information is given. And this is again valuation of bonds. I don't know, this attempt valuation of bonds and shares chapter is given me too much preference. 2 questions, 2 into 7, 14. Descriptive they asked 2 into 7, 14. And MCQs also they asked 2 MCQs so far, 2 into 2, 4 marks. So very good weightage has been given for valuation of bonds and valuation of shares. That chapter, especially valuation of bonds they are asking, and valuation of shares also they are asking. Valuation of bonds on descriptive question and valuation of shares also on descriptive question. And MCQ also there are one MCQ on valuation of bond and one MCQ on valuation of shares. Okay, so this is what bond is price they are asking, equilibrium, theoretical market price they are asking. You can calculate easily theoretical market price. All are time taking MCQs. MCQs also time taking. It is very simple. The concept is covered, but student has to calculate. It's a time taking. That's all. Okay, and this one is fifth MCQ is from your derivatives chapter. Very easy to calculate and not time taking also, that anyone can calculate, depend upon the FSP, feature spot price and strike price, what is the premium paid, everything you can calculate the value, gain, net gain or loss. So there are so many problems we calculated for like that. Okay, next this is from again portfolio management only, the direct MCQ from your institute, direct MCQ from institute for portfolio management, and this is also from arbitrage pricing theory, direct MCQ from your institute based on portfolio management only. Next one, this is also a direct not direct MCQ, but there is a example is there in your institute material. From that they are framing a MCQ, risk tolerance actually. So it is covered in a theory portion only, but they are asking, but students may face difficulty to answer this MCQ. Up to 7 MCQs happily they can answer if they are reading the MCQs in institute material and they have a conceptual knowledge about derivatives, valuation of bonds, valuation of shares, performance evaluation. So as far as my knowledge, first 5 MCQs any student can answer. First 5 MCQs any student can answer who is listening to the classes and who is a practical knowledge also. These are all practical questions only. First 5 MCQs are practical questions. Any student can answer. And fifth question as well as sixth question, if they are sixth question and seventh question actually, if they are reading the institute material MCQs, they only can answer. Otherwise, no. This eighth MCQ may be a little bit difficult. If someone is reading the theory also in your institute material and total theory in portfolio management, then only they can answer this one. Okay. And ninth one, spot exchange, this is from your international financial management. Okay. So this is also you can answer, no issue. Next, which are the following components of digital infrastructure? Again, digital finance, they are asking one MCQ, a simple MCQ, anyone can answer. And again, this is from standard deviation of market index, portfolio management, but little lengthy. but you have practical knowledge, again you can answer this one also. And this is all three forms of efficient market hypothesis, again portfolio management. Separate chapter is there, efficient market hypothesis theory chapter. If you are reading the MCQ, direct MCQ, you can answer this one. But this is actually this closing prices of the stock of Monks Limited. Students cannot answer. This is a difficult MCQ. Which one of the following Greek alphabets with respect to option measures the sensitivity option? So this is also very simple in your portfolio management, and again it is portfolio management only. So many MCQs are asked from portfolio management. Out of my opinion, out of 15 MCQs, 10 MCQs students can answer, but lengthy MCQs are there. If they have a practical knowledge, even though they are not reading theory also, theory topics also, they can answer 10 MCQs comfortably. 10 into 2, 20 marks. Even average student also, you can get at least 14 marks. At least 14 marks you can get from MCQs by an average student also, who is having some practical knowledge. Valuation of bonds, valuation of shares, 2 MCQs given. Modified NPV, 1 MCQ is given. Portfolio management also 1 MCQ is given. Performance evaluation, 1 MCQ is given. Like that, 10 MCQs and at least 7 MCQs they can answer. But lengthy they have to calculate and they have to select. 7 into 2, 14 marks an average student can get. Above average student he will get maybe 18 to 20 marks also from MCQs. If you can manage to get 14 to 20 marks from MCQs, then it is very easy to get another 30 marks from descriptive. Okay. This question number 2A, let us come to the descriptive. Question number 2A, Zodiac Limited. This is a replacement decision. Very simple question. Replacement decision is a basic question. There is no life disparity in replacement. So they are asking whether to replace or not. They are not asking when to replace. Okay. So there is no life disparity also. Simple replacement decision question. So any student can answer with a normal knowledge also. And next question is Dexton Limited. This is also from lease financing. Very simple question. It is there in your material as it is. Just figures only they are changing, and this is what 2:2:1:1. Break even lease rent you have to calculate SC point of view. This problem is covered in our material and issued material also, and this is direct problem also. Okay. So student, only it will not take more time also. That you can answer happily, comfortably you can answer. Question number 2A and question number 2B comfortably they can answer. Average students also who are revising lease financing and advanced investment decisions, replacement decisions especially. I said in your strategy also, the day before exam strategy, I said leasing decisions, advanced investment decisions, especially replacement decisions, ranking conflicts, you have to observe. So if anyone is referring that okay. Question number 2A is very easy. And don't take it as a choice. If any student is taking choice question number 2A, maybe it is difficult to get more marks in SFM. Question number 3A is again from risk analysis, investment, very simple problem. As it is, problem is there in our material. So same ditto problem, copy paste. Question number 3A, and is not a lengthy problem also, it is not time taking also. Simply you can calculate standard deviation of the and expected net present value and standard deviation as well as coefficient of variation. Everything you can calculate. Next, 2B. 2B is from valuation of shares. Only one small point is added, valuation of shares. They are asking you to calculate the growth rate. Normally the problems are there, they are giving growth rate and you are calculating the share value. But here share value is given, but they are asking growth rate. That is the only twist, small twist only there. It is there in valuation shares. So if this twist students can handle, they can answer question number 3B also comfortably. And question number 4A is from again valuation of bonds. See, valuation of shares, one problem is given, and valuation of bonds, one problem is given. Little bit difficult. Students cannot answer actually. Valuation of bonds, the callable bond value. So okay, so callable bond with call option and put option they are giving valuation of bonds. Normally call option is there in your syllabus, but put option for bond plus put option, that is only a new concept they are adding here. The second is put option enabling investors. Maybe student will face some difficulty to answer this problem. Question number 4A. That is the only difficulty in this. And remaining thing, it is covered in our syllabus. And question number 4B, as it is your mutual funds problem, copy paste. Happily you can solve this problem. Question number 4B. Very simple. And as it is, copy paste. Question number 4B from mutual funds chapter. Which chapter? Mutual funds. They are giving effective, means effective annual return. They are giving. You have to calculate holding period. This is already there in our material, and as it is, problem is also there. So next, question number 5A. To capital intensive engineering. See, this one is only little bit difficult in portfolio management. Unlevered beta and levered beta, already the concept is discussed, but they are giving a comprehensive problem on levered beta as well as your CAPM, everything they are adding. Maybe the student may face little bit difficulties, like question number 4A. Question number 4a, the student is facing difficulty, and question number 3b also student is facing difficulty. Question number 3b little bit difficult, but somehow they can manage. But question number 4a, it is not possible to answer by normal students, and question number 5a also not possible to answer by the normal students. Little bit difficult in portfolio management chapter. But question number 5b, in question number question number 5b, this is a copy paste problem from the material. In our material, masterminds material, it is there, institute material is there, copy paste problem, and even before exams also, previous examination also, it is asked. Okay, portfolio beta, residual variance, portfolio variance on the basis of modern portfolio theory given by Markovich. This problem is actually covered. So copy paste and very simple to calculate also. And question number 6a, again portfolio management, this is also copy paste problem. Portfolio management plus derivatives mixed problem. So to reduce the bit of the portfolio, how many features contracts you have to purchase, this model actually we discussed in derivatives chapter, but it is material in portfolio management, it is there. The problem is there in the portfolio management, but we discussed in derivatives chapter, and it is very easy and simple problem also. Student can answer 6a and 6b. So this is actually a general knowledge question from derivatives chapter. With the knowledge of derivatives chapter, you can answer. It's not difficult actually, but this type of model is not there. This model problem is not there, but it's a general question. Expected share price you can calculate. That if that expected FSP, what is the fate of the call option you can calculate. So this is a general question. So with the general knowledge of derivatives options, you can answer this question. Question number 7a, as it is problem is there in your material, copy paste problem only. Hedging actually, hedging with forward contract, hedging with call option, or hedging with cross rates. This problem is there in our material, and as it is, the problem is also as it is there. Okay, next question number 7b. Again, this is also the same problem is there, but the only thing is one small difficult point in this problem is inflation forecast first half, second half they are giving. Maybe this is the what student may face difficulty in this question number 7b. This is the only new point. This is the only point actually. So maybe because of that they will face the difficulty. Okay. Because of that, because of this only they will face the difficulty, because of this. You know how to calculate the nominal rate, na? So real interest rate. So 1 plus nominal rate is equal to 1 plus risk-free real rate into 1 plus inflation rate. You know how to calculate. So that also they are asking, and they are asking the interest rate parity theory, purchase power parity theory. All theories they are asking this problem. So you can manage. Students can answer this. And question number 80, directly one question is from your digital finance table coin, direct question. And another question is actually from foreign bonds they are saying. That is about international financial management chapter. And question number C is from your debt securitization. As usual, one 5 marks question happily students can write, because it is a sure question from digital finance. Other question is for debt securitization, and only this question is unexpected, but you cannot expect all the questions now. So there are so many other theory questions, theory chapters are there. From that they selected this chapter and they are asking one question. These are also direct question only. All 3 questions are direct questions in theory, but 2 questions students happily and easily they can answer, but B question, if they read the material, they can answer, otherwise no. So this is what your paper, and there are so many questions comfortably you can answer, and you will get 50 marks minimum. But above 50 marks, if you want to get, then you should have maybe little bit complicated points are there. If you can manage those complicated points also, then happily you can get 60 to 70 marks in SFM paper. But for 50 marks, getting 50 marks, it is very easy. Above 50 marks, maybe little bit difficult. That is what my opinion. Okay, so all the best for your next exam. Thank you.